There seems to be a change in where VC money is going now, and the battle is hardware versus software. And hardware, as you said, the next part needs a lot of hardware, and that seems to be getting the investment. Software is pretty much solved because AI will do anything soon. So in which case, what do you need software for? You don't need anything. You don't need to design an Excel spreadsheet. You don't need to design the next thing because it'll do it for you. And you don't even need a product. So it feels like the next battle is hardware, space being one of them and stuff like that. And that solves everything because he's obviously thinking ahead, which is like, how do we solve the problems that you said? The massive amount of energy used by the robots and the computers and the data centers and the everything else that needs to happen. And he's like, well, just look at the sky, and the biggest thermonuclear reactor in our solar system is there. We just need to use that.
Hey guys, welcome to Everyday Finance. Raoul Pal and Visser Jordi contend that because there is no way out of the global debt cycle, capital is being compelled to return to the system, and cryptocurrency is the primary beneficiary of this phenomenon. They believe that Bitcoin is the most important pressure point, and they warn that even a brief downward pressure might propel it towards a price of $500,000. In their most recent conversation, both of them presented a compelling argument that a wave of liquidity growth unlike anything we have ever witnessed before is being driven by demographics that are getting older, productivity that is slowing down, and sovereign debt that is always growing. According to them, this increase is laying the groundwork for a powerful new crypto cycle. The repricing of digital assets is likely to continue well into the following year as macro tailwinds continue to build pace. Don't go just yet because Pal and Jordi are going to share the specific signs that they are monitoring as well as the structural dynamics that are driving what they consider to be the next explosive phase for cryptocurrency markets.
Yeah, I think what Trump is saying to everyone is the bet he wants to make is to move rates as close to zero as possible. And whether that's 2%, 1%, it doesn't really matter. I think the rate cuts that we did before were a normalization rate cut. So we overshot and then we moved them to a level where you can make the argument that, okay, now we're normal. The next rate cuts to me will be the actual rate cuts that we were expecting. That'll be the trigger for the business cycle. And it'll come at a time where I really do believe we are underestimating just how much build out is going to have to happen to deal with all this compute. The humanoids that are coming behind it, the full self-driving vehicles, the AI native phones, the battery needs. I mean, I've tried to explain to people in my writings with how much hardware is needed for the embodiment side. And I think you're seeing that in the semiconductors. I think semiconductors are the oil of this generation.
Yeah.
And they're breaking higher and they're broadening out. It's not just NVIDIA anymore. It's the analog names. And I think that's in preparation. So I would be using, and I have in the past, and I'm sure you have too, if you haven't seen this so far, the SOX relative to the NDX, it's having its best quarter in the last 25 years. And I think that's a kickoff phase because I think for a true business cycle scenario that you're talking about, semiconductors should outperform software, and that's what's necessary, and I think that's what started.
At first, like many of us, trying to get our heads around what was happening with the amount of capex expenditure by OpenAI, Meta, and Google, and Microsoft, it was like, okay, this is going to be a capex cycle. They'll have overordered, and then we'll have the downside. And then I was in Abu Dhabi, and I realized, oh, all the state players are involved too. I'm like, there is no end to demand in semiconductors. There is no end to demand. And then Elon's like, we need 1 trillion things. And then somebody else says, we need a quadrillion data set. It's like, okay, this is, we've just seen Facebook saying, oh, it's going to do a debt offering for like $23 billion to build more stuff. And it's not going to stop because the technology is exponential. And I know many people watching this, rolling their eyes, saying, this is like 1999 all over again. It's not.
Mm-hmm. No, this one is actually one of the simplest things I've ever seen, where you have two groups right now, the two largest groups on the planet, governments and the hyperscalers. Like it's difficult to say to people, you realize the hyperscalers are massive. In the S&P 500, they're 30%. 7 names make up 30%. But they also make up close to 60% of the earnings growth. Their revenues are growing at 10+%, while nominal GDP is 4.5%, and the S&P X, those 7, their revenues are growing at 4%. You and I grew up in a world where if nominal GDP was 5, you'd take a multiple of 1.5 of that, and that would be the revenue for the S&P 500. Well, now, X the hyperscalers, you're below nominal GDP. And the reason is because the S&P 493 are old companies. They're old businesses that are barely competing for the most part with them. This spending is a race for AGI. It's a race for ASI. They believe if they don't win, they're out of business. Mark Zuckerberg is paying $100 million for OpenAI employees, and he's now hired apparently 8 of them have signed on for that bonus. That's confirmation that they are in a race because you will face obsolescence if you don't get there. Whether or not that's true, they believe it. And then on the government side, you have the US and China believing that whoever gets this controls the world. So this can't stop. There's no way it can stop. The only thing that can stop it is the friction from power. That is it. That is the only thing I can see, is that we won't have the power infrastructure to be able to do it.
Yeah, I see it the same way. The other interesting thing I always look for signal is in stuff that Elon says. And one thing he's just planting a million flags that people don't pick up is, the world is so fossil fuel focused. That is the way. And, fossil fuel, yes, is recycled sunlight stored underground. But there's a bunch of people obsessed by the Kardashev scale, which is the type 1 civilization. Basically, we've got a million times more energy than we need from the sun alone. And Elon's point is 99.99% of all of our energy will come from the sun, and everything else will be a rounding error. And that solves everything, because he's obviously thinking ahead, which is like, how do we solve the problems that you said? The massive amount of energy used by the robots and the computers and the data centers and the everything else that needs to happen. And he's like, well, just look at the sky, and the biggest thermonuclear reactor in our solar system is there. We just need to use that. Does that fit into your framework?
It does. The problem is, and this is so. And I don't know if you've done this, but as you listen to Elon and you listen to Eric Schmidt, you listen to Mo Gadwat and all the people associated with Pierre Diamandis, as you're doing that, almost keep a timeline of the next 25 years. Because a lot of the things they're talking about, we'll start seeing the benefits on like solar. It's going to take a lot longer. Fusion, all this. We need infrastructure, and the ability of building the infrastructure, it takes time. It's just not that simple to go. The solution and the cost will get there, and we'll come up with the problems because AGI will speed up us solving these things and finding better ways to do it. But the actual physical part, we're running into a problem with the physical part. So in the next 5 years, we know we're going to have massive advancements. Human beings are not prepared for this in any way, shape, or form. If they're scared right now of their jobs, what are they going to do when there's humanoids walking down the street? And it's not like a gimmick, but it's actually happening. When Waymos run into New York, do you really think they're not going to be set on fire? Do you really think we saw protests around Uber? So I think the problem is, for the next 25 years, this is this kind of really bad place where I think the job situation is going to be impacted because of capitalism. Capitalism is towards shareholder wealth. You're going to see bankruptcies from companies that can't compete, who are losing their business quickly. That's why rates have to go down. And on the flip side, you're going to see the bigger companies just stop hiring across sectors. It's not going to be one-off. You'll have a rise in entrepreneurs, but that kind of disconnect between the next 25 years of people figuring out how to survive, I think the solar thing is a really optimistic thing. Same thing like living forever and all of these different pieces. But I think we're in this 5 to 10 year gap where everything I see, I think it tilts more towards people adjusting than people benefiting. And that's the part that I see.
As the strain on the economy continues to increase, individuals are taking risks that they would have never considered taking 10 years ago. As a result of wages being unchanged, debt levels increasing, and traditional assets appearing to be increasingly out of reach, speculation has evolved into a means of surviving, a prominent indication that speculative behavior is replacing Traditional consumer habits is the fact that gambling spending in the United States has skyrocketed beyond $200 billion annually, despite the fact that vehicle sales have been on the down. This kind of setting is ideal for the growth of cryptocurrency since it is instant, easily accessible, and designed for involvement in real time. Despite the fact that alternative cryptocurrencies continue to be pushed down by supply that is left over from the previous cycle, Raoul Pal and Visser Jordi observe that institutional confidence in Bitcoin is growing deeper. In the event that Ethereum and Solana are able to decisively break their previous highs, however, the overhang may eventually be lifted, which would result in a widespread short squeeze across the cryptocurrency market. What is the end result? It is a surge of fresh cash that serves as the impetus for the subsequent significant wave of wealth growth.
Although, I follow the Chinese solar adoption, and it is vertical.
Absolutely.
I mean, it is one of the fastest exponential trends I've seen. Is that they've kind of figured out that this is the only way forward. With a command economy, you say it, and therefore it is so. We haven't managed to do that yet.
No, and I mean, Elon's been posting on X over the last 24 hours about what was taken out of the big, beautiful bill. And it's not just the EV side. It is the solar, it's the wind, it's everything that goes into it because we need clean energy. And he's basically saying, so we're going to stay with fossil fuels now because the government can't get away from what it needs to do. So I wrote a piece on Chevron and Exxon as bullish AI trades, not because they are doing anything or building nuclear or solar or wind. It's because gas-fired plants are the only option I can see in the U.S. at this point to fill in the gap for the power needs we have for the next 5 years. And that's where I think there's just this next 5 years to me worries me, except for one thing. We will spend the money. We will absolutely debase. We will do everything we need to do to compete to make sure AI is going. I just think people are going to have a hard time adjusting to what's about to happen. That's my own personal view. So,
another thing that's triggered in my mind from talking is there seems to be a change in where VC money is going now, and the battle is hardware versus software. And hardware, as you said, the next part needs a lot of hardware, and that seems to be getting the investment. Software is pretty much solved because AI will do anything soon. So in which case, what do you need software for? You don't need anything. You don't need to design an Excel spreadsheet. You don't need to design the next thing because it'll do it for you, and you don't even need a product. So it feels like the next battle is hardware, space being one of them and stuff like that.
Mm-hmm. So this gets back into the business cycle thing. One of my favorite companies to view monthly is Stripe. I think Stripe owns the ecosystem of information for the startup world now, much more so than the VC world, because they're tracking everything and they have all these companies on their platform. And just them talking, I think during the Stripe sessions, which was in May, they highlighted that Cursor had 300 million in ARR, which I now believe is 500 million in ARR. The other problem with software companies is that they're able to scale without needing capital. They're able to scale very, very quickly. And so you don't actually get the chance to invest in them, and they don't need the capital, and they don't want to give up ownership. The physical world still takes capital to build things. So hardware still needs investment. It still needs the dollars. So this gets back into the rise of software. I really do believe the software world, anything built on code is now ubiquitous, as you said. And so any company is now they're gonna have competition, and that goes for Google. That goes for all of these companies. If they don't find a way to keep their business lines alive, we've obviously seen it with Google Search. It's not that they're gonna go out of business. It's not that they're gonna go. But I think the days of their revenue, of their earnings growing rapidly, are over. I think that if it wasn't for the changes put into the big beautiful bill in allowing depreciation of their investment to be at a certain level that allows them to kind of hope in the future they get the revenues in to offset delaying this expenses. I think the hardware side is a much better place for people to be, and I think the VC world sees it as a safer investment as well.
Final question for you. Another one of your themes that I like to move along mentally from time to time is the Ozempic GLP-1 idea that you had. And where's your head with all of that now? Because that was always an interesting thesis. In fact, you wrote it up for GMI a couple of years ago as well.
I did. It's in an interesting place because of obviously Trump taking over. You have a lot of fear throughout the biotech world as to what they're going to allow and what the rules are going to be. The good side is, and I guess this isn't good for things like McDonald's and things like Coca-Cola. I think what Ozempic, in kind of my mindset, we know that there's going to be solutions to all the diseases that have gone on. We know that. We've learned more
there's
about...
a version now that's coming to trial, that's been trialed, which doesn't give you any muscle loss either.
Yeah. And that's the part. They're learning on what they can do for the offsets. You collect the data, it'll get better and better. And we obviously need this because of the diabetes problem that's across the planet. But it coincides. Diabetes to me is a form of aging. It's a form of us realizing aging is a disease, and we're making a lot more ground on that too. Interesting work on cellular level details, epigenomics in terms of reverse aging. I just think there's a lot happening. This was necessary, again, as a bridge to AI. So I still think the GLP-1s at this point, they'll get easier to take, obviously with pills. They'll get easier in terms of the side effects to go through it. As we can do more predictive analytics and we can match up which one is a better version for particular DNA, that'll be there. But these are just bridge drugs to me. So if I had to guess, again, for the next 3 to 4 years, everything is fine. But as it is with all companies, at some point when you get past the 5-year mark, and this is a take we haven't talked about, I'm really, really negative on long duration assets. I think it is a very, very difficult world to forecast what anything is going to look like 5 years from now.
The rapid acceleration of artificial intelligence adoption and the vast infrastructure build-out that it requires are the driving forces behind. Jordy Visor's prediction that the second half of the year would be the setting for a potentially explosive shift in the event that reasoning, inference, and autonomous agents start scaling into real-world systems. He forecasts that the utilization of AI tokens might increase by as much as 50 times. It will be necessary to make enormous investments in energy, data centers, and hardware in order to satisfy that demand. He anticipates that the government will provide significantly more funds for these endeavors. Given that interest rates are expected to fall and liquidity is expected to return, Visser is of the opinion that capital will progressively flow into industries that are directly connected to the revolution brought about by AI. In addition, he believes that cryptocurrency has the potential to be a significant benefit, since it is in a position that is unmatched to capitalize on the rapidity, magnitude, and structural shifts that are transforming the economy in relation to artificial intelligence. Do you view things from the same perspective as Visser, or do you lean more towards Raoul Pal's perspective?